So, what actually happens when an entire country's stock market gets a massive promotion on the world stage? Well, right now, all eyes are on Vietnam as it gets ready for exactly that. It could mean a huge flood of foreign cash pouring in. But the big question is this a golden opportunity or a really high stakes gamble?
Okay, to really get our heads around this, here's what we're going to do. First, we'll look at the upgrade itself. Then, we'll break down what these market labels actually mean before, following the money. After that, we'll see how an investor might play this, and finally, we'll weigh the enormous opportunities against some pretty serious risks. All right, let's dive right in. What's this big news that has global investors all of a sudden paying so much attention to Vietnam? What's the big deal? This is really the core of it, isn't it? A promotion like this isn't just some new label they slap on. No, it's a fundamental shift that has massive, real-world consequences for the entire country and really for the flow of money around the globe. And this isn't just a hypothetical. The major index provider, FTSE Russell, has officially put Vietnam on the path to be reclassified. Think of it exactly like a super talented sports team getting called up from the minor leagues to finally play in the big show. More eyeballs, more money, but a whole new level of competition. Okay, so you're going to hear these two words thrown around a lot: frontier and emerging. What do these market labels actually mean? And why does making that switch from one to the other matter so much?
So, this is the journey Vietnam is on. It's basically graduating from a frontier market, think early stage, super high potential, but also way higher risk, to an emerging market. That means joining the ranks of more developed economies that are deeply plugged into the global financial system. And that change in status, well, it's a huge signal of confidence to the rest of the world.
Now, this isn't happening overnight. FTSE has laid out a really clear timeline. There's a key progress check coming up in March, and the official inclusion is set for September 2026. This runway gives the market and investors time to get ready for the shift. And who are the players getting the call up to the big leagues? Well, we're talking about some of Vietnam's absolute corporate giants, heavy hitters in real estate, banking, steel, and technology. These are household names in Vietnam, and pretty soon they're going to be automatically added to the portfolios of massive global investment funds. And now we get to the most dramatic part of this story: the money. Because this reclassification, it isn't just a title change. It's a trigger for a massive, massive movement of capital. Okay, here's the key thing you've got to understand. This isn't optional. There are literally trillions of dollars in global funds that are mandated to track these emerging market indexes. So when Vietnam gets added, those funds have to buy Vietnamese stocks to match that index. It's an automatic program fire hose of cash. And the scale of this is just immense. Analysis from ACBS Securities estimates that just from a handful of exchange-traded funds, or ETFs, Vietnam is looking at an inflow of nearly $500 million. And remember, that's just one slice of the pie. But, and this is a huge but, this is where the story takes a sharp turn. With all that capital comes great risk. The International Monetary Fund, the IMF, has a very clear warning. This same flood of money that builds a market up can also make it a whole lot more volatile. And this isn't just a theory. The data from the IMF is pretty startling. Just look at the shock during the COVID-19 crisis. You can see that capital fled emerging markets at a rate that absolutely dwarfed previous crises, like the 2008 crash. It's a stark reminder that what flows in can flow out even faster when global panic sets in. So, this brings us to a really critical question. Given this environment of huge potential gains, but also some pretty significant volatility, how should someone even think about investing in Vietnam's newly elevated market? It really is the classic debate, right? Do you just buy the whole market through a simple passive fund, or do you actively manage your investments, trying to pick the winners and dodge the losers? In a market like Vietnam, the answer is especially important. So let's look at the trade-offs, drawing on some analysis from ACIS Capital. On one hand, passive ETFs are simple and cheap, but you run the risk of being way too concentrated in state-owned or cyclical companies. Active management, on the other hand, it costs more, but it lets an investor be way more selective and nimble. And the experts over at ACIS Capital, well, they make their view pretty clear. They argue that to really capture the growth story in a complex, developing market like Vietnam, just blindly copying an index isn't going to cut it. You need a disciplined, research-driven approach. Okay, so let's pull all of these different threads together. What's the final takeaway? What is the big picture for Vietnam as it steps onto this brand new stage? At the end of the day, it really comes down to this. The promotion is a classic double-edged sword. On one side, you have incredible access to a high-growth economy and billions in new capital. But on the other side, you have much greater exposure to the whims of global finance, with higher volatility and a new sensitivity to shocks happening halfway across the world.
This risk is so significant that institutions like the IMF actually have a name for it: capital flows at risk. It's basically just a formal way of measuring the danger that a sudden U-turn in investment could destabilize an entire economy. And this is the new high-stakes reality that Vietnam has to learn to navigate.
Ultimately, Vietnam's promotion is a huge milestone, but it's part of a much larger global story of economic development. And it leaves us with a really fascinating question. As other frontier markets watch and learn from Vietnam's experience, who's going to be next to take this leap? And will they find that the immense rewards of joining the global financial system are truly worth the inherent risks?